In this video, I bring you a summary of the most important developments in our portfolio over the past month. I will switch to the portfolio history. And I see that in the first month, there was an appreciation of 2.32%. In the month of May, there was an appreciation of 9.38%. And in the last month, there was a decline of 6.5%. The overall annual yield in these past 3 months is 4.58%. The green curve shows us the balance. It has fallen to minus 3.69%. From that moment, it rose to a maximum of 11.92%, with the red curve representing exposure, and the highest exposure here was initially 5.04%. As for the breakdown of individual symbols we have here in the portfolio, gold. This had an impact on the portfolio of plus 8.4%. The Nasdaq index up by 0.8%, the euro up by only 0.4%, and a loss of 0.01% on the DAX index. The dollar-yen pair declined by minus 1.4%, and the Nikkei index fell by minus 4.7%. So we can see the breakdown of individual symbols in the portfolio. It is clear that gold is in a period that works beautifully. There has been some equity high in the Nasdaq index. $78, and since then the Nasdaq index has mostly been declining. There is a certain correlation to be seen here, as this color represents the Nasdaq index, light green is the DAX index, and orange is the Nikkei, and there has been a kind of break here where the losses of the indices essentially began to correlate. The currencies in that portfolio do not significantly affect the equity, and this portfolio has actually driven its performance over the last month. Gold. Here is the breakdown of individual trades. When I look at the reason why, for example, the Nasdaq index has lost a lot in the last month, I can see that reason clearly in the graph. Because here I have the beginning of the month. Here is the half of the month currently, and when I look, the market is basically a long-only algorithm, and the market doesn't have any significant breakouts to the long side. So it makes sense that the strategy caught a lot of stop losses if there are no significant long trends. If I look instead at the strategy for gold, which has performed the best recently, So I see that gold is very volatile and there is a lot of fluctuation, and these basic price levels, whether for long or then back to short, are beautifully clear. And those breakouts are essentially trends without any significant corrections. That's why gold has performed the best in the recent period. I opened the Quant Analyzer program in which I will show the breakdown of individual strategies in the portfolio, so I have completed tests from MetaTrader 5. In quality, I test each one on every tick. I will mark all the strategies in the portfolio and import them. The strategies in the portfolio have a unified exposure. And I can take a look and check that the exposure is around $70, $80 historically since 2018. When I look at individual equities, so it can be seen that in certain periods, those individual components of the portfolio, sometimes even one year, may show no profit, and the next year they perform beautifully. This is essentially a basic optical analysis of these strategies and their equity curves. Here I have the individual years. And I'll switch it for a while. So I see that some years earn beautifully, while others less so. This is the euro-only currency pair. And here you can also see that in 2019, the strategy was doing well. In 2020, it barely succeeded. In 2021, it basically didn't do much either. Oh, and again in 2023. Is relatively successful. Here I can even see that there are 2 years in Eurodollars that are essentially unprofitable. The Nasdaq index looks like this. And here's the drop due to the large gap that essentially occurred overnight across the closed market. And there was a gap in the market with a recorded loss of about 8 or 10 times compared to the originally set stop loss. This is what the Nikkei index looks like. This is what the dollar-yen currency pair looks like. And this is what equity for gold looks like. It can be seen that this year, thanks to volatility, gold is doing quite well. If I wanted to create a portfolio from these strategies, then I will mark them. I will create the portfolio. And now I see the metrics for this portfolio. So I have about 2,500 trades in this portfolio from 2018 to 2025. and then they look like this. Metrics. This is all within breakout strategies, so the breakouts have a lower win percentage. It's 30 to 40%. Individual months are displayed here. Regarding the correlation, I can look at the weekly correlation of gains and losses and see that it is at most around 12%, where the Nasdaq correlates with the DAX at 12%. The monthly correlation of losses is a maximum of around 19%, where the Nikkei correlates 19% with the DAX in terms of gains and losses. This portfolio is relatively well structured. It includes currencies, precious metals, gold, and 3 different indices. So here is the possibility of achieving a low correlation. This is what the equity curve of the portfolio looks like, with the observation that when I look at the exposure here, it is about $175, and the exposure in live trading could be even slightly larger due to the shift in probabilities. When I have the script and data for the current state of the build, then data for out-of-sample testing and data for true out-of-sample testing, the live market is still slightly shifted in relation to these probabilities. So when I look here at, for example, the last year, I should have some profit of $422, and the maximum historical exposure that I should consider is about $200.